Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak podcast. Good morning. It's Wednesday, the 23rd of July. I'm Caroline Hepker in London.
And I'm Stephen Carroll in Brussels. Coming up today, reports say Japan's Prime Minister will announce he's resigning as soon as this month after sealing a US trade deal setting tariffs at 15%.
The US Nuclear Safety Agency suffers a cybersecurity breach as Microsoft points the finger at Chinese-sponsored hackers.
Plus, Europe warms to China's growing investments across the continent and what Beijing may want in return.
Let's start with a roundup of our top stories.
Japanese media are reporting that the country's embattled Prime Minister Shigeru Ishiba will announce he's stepping down as soon as this month. The reporting comes after Ishiba's ruling coalition suffered a historic setback in Sunday's upper house election and comes just hours after Japan secured a trade agreement with the Trump administration. The Prime Minister had cited the trade talks as one of the reasons he needed to stay on, but the agreement with the US now seemingly clears the way for him to leave office.
Reports of Ishiba's decision came as President Trump announced a deal with Japan that sets tariffs on the country's imports into the US at 15%. The agreement spares the key American ally from a threatened 25% tariff rate that was set to take effect next week. Crucially for Japan, the 15% rate covers car and car parts exports to the US. Shares in Japanese car makers jumped on the news, with Toyota Motor Corporation up as much as 16.3% in trading. Now, in return, Japan will accept cars and trucks built to American safety standards. Here is President Trump discussing the deal.
We worked on it long and hard, and it's a great deal for everybody. I always say it has to be great for everybody. It's a great deal. A lot different from the deals in the past, I can tell you that.
A centrepiece of the pact outlined by Trump is a $550 billion fund backed by the Japanese to make investments in America, with details still to be hammered out. Japan has also agreed to buy 100 Boeing aircraft, boost rice purchases and increase defence spending with US firms. President Trump, meanwhile, pledged to guarantee Japan the lowest global rate on forthcoming sectoral tariffs, expected to include semiconductors and pharmaceuticals.
The US-Japan deal will add pressure on the European Union to secure an agreement with the White House as the bloc's top leaders also seek to deepen ties with Japan. European Commission President Ursula von der Leyen and European Council President Antonio Costa were expected to meet Prime Minister Ishiba in the coming hours, but even if the meeting goes ahead, it takes on a new tone. European officials describe Japan as its closest strategic trading partner in the Indo-Pacific region. The leaders plan to sign agreements on defence industry cooperation and economic security, with officials saying they will also compare notes on their trade negotiations with the Trump administration.
Now, the Italian bank UniCredit has reported second quarter net profits that beat estimates. Net profits coming in at almost 3.5 billion euros. UniCredit is kicking off the earnings season for Italian banks, also announcing revenue of 6.13 billion euros, just slightly below the estimated 6.17 billion. The focus overall for the company remains on Chief Executive Officer Andrea Orcel's M&A ambitions, which have seen setbacks. UniCredit's board decided to withdraw an offer for Banco BPM on Tuesday because it effectively couldn't secure government authorization, according to a statement. And a separate approach by UniCredit for Germany's Commerzbank is stalled amid opposition from Berlin.
Europe's most valuable company, SAP, has reported quarterly sales that fell just short of estimates. The firm, which sells software to manage business operations, said cloud and software revenue rose by 11% to just shy of 8 billion euros. SAP also warns that the weakening dollar poses currency pressures for the firm, which generates more than 30% of its sales in the US.
The US agency responsible for producing and dismantling nuclear weapons has been breached by a hack of Microsoft's SharePoint system. Bloomberg understands that no sensitive information from the National Nuclear Security Administration is believed to have been compromised. But Anne Neuberger, former US Deputy National Security Advisor, says the attack is significant.
Because SharePoint is so widely used, we can expect likely a fair number of victims. And the vulnerability is a major one. So attackers can not only steal data, they're stealing keys. And when they steal keys, think about physical keys in our own homes. That means they can get back in unless keys are changed, and they can maintain access.
Anne Neuberger, former US Deputy National Security Advisor, speaking there. Hackers were able to breach the agency as part of a 2020 attack on a widely used software program from SolarWinds that Microsoft blames on Chinese state-sponsored attackers. A department spokesperson at the National Nuclear Security Administration said then that malware had been isolated to business networks only. In a statement recently, the Chinese embassy in Washington said that China firmly opposes all forms of cyber attacks and cybercrime.
In sports news, England's Lionesses are through to the final of the Women's Football European Championship after defeating Italy in extra time. Manager Serena Wiegmann says she's experiencing a range of emotions following the dramatic 2-1 victory.
I'm feeling relieved, I'm feeling happy. It feels a bit surreal, making a final again. But we're here. And we're going to the final, so we need to recover a bit.
England's Serena Wiegmann speaking there. The defending champions forced extra time with a 96th minute equaliser from 19-year-old Michelle Agamang before Chloe Kelly struck in the 119th minute from a rebound after seeing her penalty saved. The team will play Spain or Germany in the final on Sunday.
So those are our top stories for you this morning. Well, you know, the football was exciting, but the markets, frankly, are also exciting today, Stephen, because of this trade deal between the US and Japan. So at the moment, we're seeing the MSCI Asia Pacific index broadly up by 1.8%. The Nikkei 225 surging 3.5%. You've also got Toyota Motor Corporation. It's not the only one, but it's certainly seeing a huge jump, currently up 14.7% right now. Stock futures for Europe are also surging 1.2% higher. A word in there for the bond markets. They were up a couple of basis points on the 10-year US Treasury yield at 4.36. The Japanese yen is slightly weaker against the dollar, down 0.2%. And then, of course, we're in the midst of earnings season, so we've still got Tesla and Alphabet to report on Wednesday. The MAG, 7 companies overall expected to post a combined 14% rise in second quarter profits.
Yeah, indeed. And on that story from UniCredit as well, improving their outlook for full year profit and shareholder distributions. The full year profit expectations now lifted to around €10.5 billion. The distribution to shareholders planning to get to €9.5 billion this year as well. The net income figure for the second quarter at €3.3 billion, which was an increase as well. In a moment, we'll bring you more on the US-Japan trade deal and look at how Chinese companies are shifting their investment strategies in Europe. But another story that we've been reading this morning, if you hadn't perhaps realised, it is 2025, but we are talking about meme stocks all over again. They're memeier than ever, it seems. I don't know if you want to go back to the days of GameStop and Bed Bath and Beyond. This time around, it's the department store Kohl's and the property website Open Door that have caught the internet's imagination. So quite similar to in 2021, we're seeing traders piling into heavily shorted companies in a bid to strike quick riches. Some similarities to 2021, stock markets at all-time highs, Bitcoin's doubled in less than a year. But Steve Stasnik from Interactive Traders has charmingly called this a flight to crap.
I love that. That is wild. Look, I mean, not to do down the retail investor. I mean, why not? If you've got money to invest and you want to try to make a profit, of course. But yes, I think it is also kind of a difficult moment whether, when people pile into these stocks, and I don't want to go back to 2021 though.
No, indeed. Perhaps not the moment we'll remember from 2021 down the line. Let's bring you more details, though, on that top story this morning. The trade agreement between the US and Japan, lowering tariffs in exchange for commitments to purchase more American goods and set up that fund to invest $550 billion in the US. And Japanese media are also reporting that Prime Minister Shigeru Ishiba will now resign from his post. Bloomberg's John Herskovitz joins us from Tokyo for more. John, great to talk to you. Let's start with the trade deal then. What are the key headlines from it?
Sure. The main thing is the reduction of the tariffs. Trump had threatened 25%. That's been knocked down to 15%. And this also applies to automobiles. And automobiles and auto parts are the bulk of Japanese exports to the U.S. This is the biggest sector affected. And this is the one that's going to see the rate drop by 10 percentage points to 15%. As you mentioned previously, auto shares like Toyota have jumped on the news. There's finally some sort of certainty what's going on. And the one thing that Japan offered in return is like dropping some of these non-tariff barriers, like accepting U.S. safety standards. But the thing is, for the Japanese auto market, even with these changes, you're probably not going to see a lot of U.S. cars here. About 40% of the Japanese auto market is this type of car called a K car for light, small engine displacement, small in size and weight. And the U.S. automakers don't make anything for this market. Also, Japanese cars are on the right side of the road. Japanese cars drive on the other side as U.S. cars, steering wheels on the other side. So U.S. cars probably aren't going to be making much of an inroad here. And other things in the deal are this $550 billion fund, which Trump says will be similar to a sovereign investment fund. I think we still have to wait for the details to find out what this is. It may be difficult to see Japan actually giving this amount of money when it's already one of the largest foreign direct investment countries in the U.S. So it's a lot of money on top of what's already gone on. We have the Boeing aircraft, about 100, more agricultural goods, increase in defense spending, and there's also an LNG project in Alaska that the U.S. has been pitching for years, bringing LNG from the state to Asia, to places like Japan. Whether this will actually happen is another matter. Trump has been pitching this for a while. Actually getting this and getting the purchases, getting it to Asia is something that is a bit in doubt at this moment.
Okay, interesting. So the main issue on the car manufacturers, yes, Honda Motor Corporation share price up by 12% and Nissan Motors up 10% at the peak, the kind of immediate reaction then to this deal. But look, there are also reports in Japanese media that the Prime Minister is now planning to resign. So what more can you tell us on that front?
Sure. The way it looks now, what we've seen in Japanese media, people close to the ruling Liberal Democratic Party are saying that Prime Minister Ishiba is looking to resign in August. This will set up a leadership struggle for the party that's ruled for most of Japan's post-war history. But the interesting thing is that the LDP, the ruling LDP party, doesn't have an outright majority in either house of parliament. So even if they pick a leader, there's probably going to be some deal-making with some of the smaller parties to get that leader to stay on as the prime minister. So it's interesting to see Ishiba suffered the defeat in the upper house election this month. He suffered a previous defeat in a lower house election. He's been on the job for about 9-10 months. His popularity is below, his approval ratings below 20%. That's considered, when you get below 20%, it's considered a danger zone in Japan. And 2 election losses, low popularity, and a lot of people angry about inflation. He just doesn't have a way to stay on in the job.
Okay. John, thanks very much for being with us. John Herskowitz in Tokyo there with more on the stories out of Japan this morning.
Well, meanwhile, European Union leaders are travelling to Beijing tomorrow for a high-level summit. It could signal a turning point in a sometimes strained relationship at a time when both parties are facing Donald Trump's trade tariffs. Chinese companies, too, have been shifting their investment strategies in Europe with a move to higher-value industries and building their own factories with the help of state subsidies. Bloomberg's Libby Cherry has been writing about this in today's Big Take story. She joins us now from Frankfurt for more. Good morning, Libby. How have Chinese attitudes to European investment shifted?
I think what is really important when we're talking about the kind of shift in strategy that we've seen from Chinese companies when it comes to their investments in Europe is to put it in the kind of broader arc of where we've seen European investments. So I would say the peak of that investment, and we're looking at a report put together by Rhodium Group and Merix, was in 2016. Which was really, we saw a lot of Chinese companies looking to buy, stakes in football clubs, a lot of trophy assets. And since then, obviously, the climate has slightly shifted. And, we've seen kind of 7 years of decline up until 2024, where we've seen a bit of a rebound. And it does seem, when we sort of speak to people anecdotally, that Chinese companies are looking to do a bit more investment in Europe. But obviously, this comes in a context where investment has really, really come down. I mean, the levels in 2024 are about a fifth of where they were at the peak in 2016.
What are the main reasons for it then, Libby?
So a lot of this comes down to the politics. So obviously on the Chinese side, what's happened is you've seen a lot of, from the government, looking to try and shift Chinese investments to more of these sort of so-called strategic investments. So that might be, for example, in battery technology, rather than the sort of trophy assets I was talking about before. And on the European side, sort of in response to that shift to more strategic investments, you've seen a lot more tightening of screening, and that stopped some Chinese acquisitions from occurring. However, it isn't wholly political. So if we look at the industries where Chinese companies have traditionally invested, so for example, in automotive, machinery, we've seen a lot of macroeconomic pressure there.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.